Renaissance Technologies is an American hedge fund management company that operates 3 funds. It operates in East Setauket, Long Island, New York, near Stony Brook University, with administrative functions handled in Manhattan. History: started in 1982 by James Simons, Renaissance currently has more than $23 billion in assets under management. Since 1989, the company's $5 billion Medallion Fund has averaged 35% annual returns after fees. The Medallion Fund is one of the most successful hedge funds. In 2011, out of 144 tech pro, Renaissance Technology was ranked as number 4 of the best IT department in financial services. Simons retired at the end of 2009. Renaissance charges a management fee of 5% and a profit participation of, initially 36%, and now 44%, both of which are higher than the industry standard of 2% and 20%, respectively. Funds: the Medallion Fund has traded non-stock instruments and is international. American traded instruments include commodities futures and U.S. Treasury bonds. Foreign traded instruments include currency swaps, commodities futures, and foreign bonds. The Medallion Fund has its own internal trading desk, staffed by approximately 20 traders, and trades from Monday opening bell in Australia through Friday closing bell in the US. Its origins date to the late 1980s, and it is believed to have essentially subsumed the trading positions and intellectual property of James Axe's Axcom Trading Advisors after that company's dissolution in 1992. The Nova Fund has traded Nasdaq stocks only, executing purely electronically, with a desk staffed by 1 or 2 traders overseeing operations. In the mid-1990s, Nova was one of Instanet's largest volume customers. On one day in 1997, Nova executions accounted for 14% of the share volume of the Nasdaq. The Renaissance Institutional Equities Fund started in mid-2005 and is offered as a fund for institutional investors. Renaissance manages a number of other funds in various markets, including mortgage-backed securities and funds of external managed funds like the Renaissance Return Fund. Investment strategy: for more than 20 years, Simons Renaissance Technologies Hedge Fund, which trades in markets around the world, has employed complex mathematical models to analyze and execute trades, many of them automated. Renaissance uses computer-based models to predict price changes in easily traded financial instruments. These models are based on analyzing as much data as can be gathered, then looking for non-random movements to make predictions. Some also attribute Renaissance performance to employing financial signal processing techniques such as pattern recognition. Renaissance employs staff with non-financial backgrounds, including mathematicians, physicists, astrophysicists and statisticians. About a third of the 275 employees at the East Setauket office have PhDs. Like many other quantitative funds, their RIE fund had difficulty with the higher volatility environment that persisted throughout the end of the summer of 2007. According to an August 10 article in Bloomberg by Catherine Burton, James Simons' $29 billion Renaissance Institutional Equities Fund fell 8.7% in August 2007 when his computer models used to buy and sell stocks were overwhelmed by securities price swings. The 2-year-old quantitative, or quant, hedge fund now has declined 7.4% for the year. Simons said other hedge funds have been forced to sell positions, short-circuiting statistical models based on the relationships among securities. On September 25, 2008, Renaissance wrote a comment letter to the Securities and Exchange Commission, discouraging them from implementing a rule change that would have permitted the public to access information regarding institutional investors' short positions, as they can currently do with long positions. The company cited a number of reasons for this, including the fact that institutional investors may alter their trading activity to avoid public disclosure. Investment returns: for the 11 years ending in December 1999, Medallion's cumulative returns were 2,478.6%. Among all offshore funds over that same period, according to the database run by hedge fund observer Antoine Bernheim, the next best performer was George Soros' Quantum Fund, with a 1,710.1% return. A measurement of the risk that accompanied Medallion's high annual returns is not publicly available. In 2009, the Medallion Fund topped the list of the most profitable hedge funds with profits of over $1 billion. Personnel: Jim Simons, founder, president and CEO, Peter Brown, co-CEO, Gudjon Hermansson, production manager, Medallion Fund. Stony Brook University, Ph.D., Computer Science, 1993, Robert Lurie, Head, Futures Research, Nathaniel Simons, Principal, Vice Chairman, and Director, George Zweig, Renaissance Alumni, Alexander Astashkevich Euro Research, Medallion Fund, committed murder and suicide in February 2006, James Axe, founder of Attribution Trading Advisors, predecessor to the Medallion Fund, and a mathematician, Elwyn Bergkamp, president of Attribution Trading Advisors, predecessor to the Medallion Fund, and a mathematician, Leonard E. Baum, the co-author for the Baum-Welch algorithm, built early trading models for Attribution Trading Advisors, Robert J. Frey, 1992–2004, Managing Director Emeritus, Henry Laufer, Vice President of Research, David Lysenko, Principal. Now Managing Director, Stone Beach Investment Management, Nick Patterson, Research, Medallion Fund. Chess player, formerly with the UK's GCHQ. Now at MIT's Broad Institute, Kresimir Panevic, Research, Medallion Fund, Orks Price, Research, Medallion Fund. Now at Harvard, Serge Verleger, 2000–2013, Head of Foreign Equities, Principal Researcher, Medallion Fund, Peter J. Weinberger, Medallion Fund, left Renaissance for Google in 2003, footnotes. External links, official website, High Frequency Trading. Bulldog Truster, Ann Bignarts. Survey ranks best IT departments in financial services. Computer World. Network World A.